Hey everyone, it's Chad Pavel, CPA here. Today we're going to talk about last minute year-end general business income tax deductions for this year, this 2019. Now, today is actually December 10th, so you've got about 21 days left before you can actually, or to enjoy these deductions. And of course, if they are more complex and require you to purchase and put something into use, like an asset, you definitely want to get moving on that today because it will soon be too late to enjoy these deductions. So as always, at the end of the year, you want to optimize your tax strategy to minimize your income tax, but also you don't want to kill your working capital, right? You don't want to go spend a bunch of money just to spend it and just to reduce taxes. You obviously want to keep a healthy balance. So let's go through 3 or 4 last minute examples here that you can implement in your business in order to reduce your taxes to a safe and fair low level. So the first thing you want to do is consider prepaying your expenses using what the IRS calls the safe harbor. And so what that means is, as a cash basis taxpayer, whether you're an LLC, an S Corp, whether you're even a C Corp, or of course a sole proprietor, even a partnership, if you're a cash basis taxpayer, then you can actually prepay for services up to 12 months in advance without any challenge or any adjustment at all. And so let's use an example. Let's say you approach your landlord and say, hey, landlord, I want to prepay the next 12 months of rent today, December 20th. Obviously, you want to talk to him about it first, him or her. But what you want to do is, if they give you the okay, you have the cash, you can actually prepay for up to 12 months of rent and deduct it this year. So you could prepay for all of 2020's rent in 2019 and still take that deduction this year. And you can do that with software subscriptions, with really anything that you purchase monthly. You can talk about products, anything, again, subscription or supply-wise or service-wise or rent-wise, you can very likely deduct this year if you prepay up to 12 months ahead of time. So obviously that means you can't pay for any 2021 services, but you can prepay for all of 2020's services as of right now, and you can take that entire deduction. So that's good because that's a full deduction on your tax return and your profit and loss statement this year, and you just need to actually pay, mail the check, initiate the wire or the ACH this year. So that's obviously a big one. The next thing you can do is to stop billing your customers, your clients, or your patients, depending on the business you're in. Now, obviously, if you're cash basis and if you send out invoices, then it's possible that you will get paid this year. And obviously, if you receive that cash, whether in your hand or constructively, meaning it hits your mailbox or it even hits your credit card processor, then you have constructively received that cash and you will then pay taxes on it. So if you can wait and push out some of your billings another couple of weeks, then it's very likely that your customers will not pay you this year. Now, your customers on the other side are probably thinking, go back to number 1, they're probably thinking, maybe I can prepay you for a couple months of service up front. So obviously, if you're on the recipient side of that cash, you need to be mindful that you're going to pay tax on it, especially if you are receiving that by the end of the year. So be mindful that your customers are probably also thinking about the same thing. But the simplest way to not get paid is to not bill your customers. Next, you can buy office equipment. Now, with the bonus depreciation now at 100%, along with other increased limits of Section 179 expensing, you can actually buy equipment or machinery, put it into use by the end of the year, and get a full 100% deduction on certain equipment before the end of the year. And that would apply for 2019. And so that equipment, you can actually finance it as well. Not a lease, you actually need to purchase it, and you can actually use a bank loan or vendor financing to take receipt of that asset. So you effectively own it as far as the IRS is concerned, even though you haven't paid cash for it. So that's a very straightforward way to take some more depreciation, reduce your taxable income, is to buy a $50,000, $100,000, $200,000 piece of equipment. You can actually finance it. You don't necessarily need to pay cash for it. And again, you can still get that full bonus depreciation. And obviously, there's a number of different ways to leverage that. And we're talking about trucks, big trucks. We're talking about computers, office equipment, furniture, other things necessary in the course of your business that you would need to purchase. So definitely consider buying office equipment as well. And again, as well as certain in the field or work-related equipment and tools as well. Next is use your credit cards. Again, if you're a single member LLC or a sole proprietor or an S Corp, you can actually, or a C Corp, if you use your business credit card, of course, it is a business expense. Even if you don't pay down the credit card balance, if you spend the money on a credit card, take that liability on the card, that is as good as spending the money, spending the cash as far as the IRS is concerned. So use your credit cards. And even if you keep a zero balance, you don't pay any interest, you can still put things on your credit card today that you will need for perhaps the beginning of January and still get the tax deduction this year in 2019. So consider using your credit cards or other financing methods to purchase things today. And obviously you want to pay them off and make sure you have the cash to do that and the cash flow. But that's another way that you can leverage the tax code to reduce your taxes today. And the biggest thing here, don't assume you're taking too many deductions. There's nothing wrong with using the tax code to your advantage and to reducing your taxable income. There's nothing wrong with using all the new hard work that that the government has put in to rewrite the tax code over the last couple of years. Use that to your advantage. Take your business deductions. Spend on credit cards if you absolutely have to. Prepay for some services. Don't bill your clients. And of course, there's a number of other things that you can do to reduce your taxable income, from retirement plans to tax planning to sitting with your CPA or EA to walk through and make that plan. So hopefully this is helpful. If you have any questions, obviously shoot us a comment below. Feel free to check out the blog, and I look forward to helping you again soon.